What is going on, guys? Luke here today, and I want to share with you the 3 SPACs I just bought. And you will never guess the last one. And I will tell you exactly why I shunned Lucid and CCIV. I know they are the hot SPAC stock that's about to explode, but I will lay out why I passed for now, and you need to understand why as the SPAC hype will intensify as the year goes on. Trust me, someone will be left holding the bag and losing a ton of money at the end of all this. If you have any interest in SPACs at all, you're going to absolutely love what we're going to talk about today. And really, all I ask for in return is that you just, ever so gently tap that like button and subscribe if you haven't already. And yes, once again, I'm going to need all the early thumbs up I can get, as this is going to get me blasted by some people. Here is exactly what is going on with all these SPACs, especially the EV SPACs. You will see a record level of SPACs this year in my opinion. And the reason why is quite simple. If I want to take my company public, I can either pay Goldman or some other big bank a huge fee to take my company public, or I can use a SPAC, save an absolute fortune in fees and even more in terms of time, legal paperwork, and on the backside make a ton more money when it's all said and done. And for the guys running the SPACs, it's the best of both worlds. They are getting a monster fee up front, so even if it fails, they cash out tens of millions of dollars, and with some, they're actually making more money than that. Plus, they get a piece of the action long term with the company as well. So why wouldn't you start a SPAC if you can raise that sort of capital? I know I sure would. It's probably the easiest big chunk of change these guys have ever made. So what happens when there is easy money to be made with far less regulation, paperwork, and effort, and for now a huge appetite from investors for getting in on these even if they have no business at all is at an all-time high? It means SPACs are going to start popping up everywhere, and anyone related to EVs, even if they really have a terrible chance of succeeding or have no real product whatsoever, are going to try to take advantage. Now I know we kid about it a lot, but Nikola was just the start of all this, and it basically laid out the model. Trevor and the guys who own the SPAC they merged with cashed out billions. And I mean that's billions with a B. Both companies basically had a handful of employees and an idea. That's it. So tell me who that does not appeal to on Wall Street, especially people who might be a little crooked. So you will see more junk than good as we go on, so you need to be extra cautious and look at reality, not just the hype trains. Now, why was I not high on the Lucid CCIV talk? Well, I actually like Lucid. They have the potential to be great. Their factory actually appears to be incredible, and they will have a product being sold by the end of this year. So it looks nothing like Nikola. Those are all positives that would make this seem like a steal, right? So who knew about CCIV before this merger talk rumor started? My guess is very few, and more importantly, this is just a rumor for now. Now I agree it looks like it may end up being true, but that's not really the point. The point is you are speculating at this point in time on a rumor. And guess what? With CCIV, you are paying a premium right now for a rumor. So this is the classic risk versus reward presentation. The risk is you are paying an 80% premium on a rumor. If you are wrong, your investment will be cut in half at least. On the reward side, what is the potential upside? Now remember, I'm not a trader, I'm an investor, so I'm not talking about the pop and subsequent hype run-up that I do think will happen if they do a merger. Yes, if this merger does go through, you could possibly double your money pretty quick. But that's not really what I'm talking about here. I'm talking about as all that hype dies down, the merger takes place, and the stock is now being judged like a normal stock. They are not at a point where you can accurately project their stock price. I like Lucid, I like what they're doing, but let's see how the market reacts to them and their products. If they truly are going to be a threat to Tesla, which is debatable, I completely understand, but for the sake of the example here, let's say they are, there will be multiple entry points in between now and then. Yes, if you bought right now, you would be ahead of me, but at what risk? And more importantly, over the long term, does anyone care what price you paid if you got into Tesla way back in 2010 or 2011? Nobody cares if it was $30 or $50 or $80 or whatever. And that's, pre-split prices. The point is, if it's a great stock, there are lots of entry points on the way to greatness. And I think if we could all get those prices on Tesla back then, we would cash out everything we had and pour everything into Tesla stock. The difference in price, whether it was $30 or $50, just completely wouldn't matter. Now the merger could go through, everything is fine and your bet completely pays off. But all I'm simply saying is don't go blasting me down in the comments saying, look, the merger is announced and CCIV shot up to $30 or $50 or whatever, and I completely missed it. I'm an investor, I'm not a speculator, and I'm in this for the long haul. I'm not interested in buying a stock and selling it 2 months later at $50 per share. I'm interested in something that will actually be $100 per share in a year or two with far less risk. And in the SPAC space, there are less risky bets with the same upside potential to me, in my opinion. Hence why I bought what I did and passed on CCIV for now. Now again, let me repeat. I'm not saying CCIV won't pay off, and I'm not saying this merger won't go through. I'm saying I think I will get the same payoff over the long term with less risk. And there will be multiple entry points in the future. Maybe not this cheap, but if it's truly a Tesla competitor, trust me, you'll be happy with the price in 5 years regardless. So what did I buy instead? Well, the first SPAC that I bought was IPOE that is merging with SoFi. I have loved SoFi from the start when I first read about it. To me, they address some of the problems I have with the usability of Square's platform. That was one of the really big drawbacks that I had with Square that kind of kept me from buying, aside from my own stupidity. The company that can do the most on their platform is going to be the one that wins in this new frontier in banking. Now, I'm not saying SoFi will blow Square out of the water or anything else like that. Cash App is crazy popular right now. I'm only saying that SoFi's platform is addressing some long-term concerns that I had with Square. And although this SPAC is hot, I'm gonna agree with that, it is not nearly as hot as all the EV SPACs are, which, I actually really like. As you all know, I have no interest in running from this hype stock to that hype stock and so on. I want to buy great growth stocks that are more than just hype and potential, and I believe this stock accomplishes that. And the second and third SPAC that I bought, and well, I'll just put them together since they're basically the same, is iPod and ipof, or IPOD and IPOF. And yeah, I'll just call it iPod and iPof because it's just easier. So have I finally just lost my mind? Why buy iPod and iPof? The answer is actually simpler than you may think. But keep this in your mind. I view my portfolio from the big picture, long-term perspective. That basically means I don't care about what happens a month from now. My time horizon for everything I buy is years. Right now they own nothing, they produce nothing, and they're just waiting on a target to merge with. But I'm not buying it based on a rumor or to 5x my money this month or this week or this day or whatever other craziness is going on. Instead of making bets like that in penny stocks, I'm betting on Chamath as a businessman long term. And yes, I 100% know I'm butchering his name. I'm really sorry. I even watch videos and I tried and I just can't formulate the words right. It's a problem, I know. I'm betting that when the SPAC mania reaches its peak and most that are out there are total trash and complete dogs, that Chamath will be one of the few who will be patient and find the company that is truly going to be around long term and may actually be the next Tesla or the next Square or the Apple of their sector. They're actually going to be that, not just hyped up to be that. What I do see and what I'm betting on is a guy who will not be wrong 3 times in a row, and if just one of these stocks hits, it will outperform over the long run any returns you can get from any of the absolutely ridiculous trading things that are going on right now. Which means I'm absolutely going to outperform those chasing the latest hot stock without all the stress, the constant chasing, and the taxes. As the market normalizes again, these risk mitigation fundamentals will separate the investors from the speculators. And investors always win over the long term. So please like and subscribe if this provided any value to you, and I will see you guys in the next one.